And good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, March 22nd, 2022. Well, the NASDAQ did manage to push itself up above 14,500 and then again 14,600, reaching a high this afternoon at 14,690. Now, this was in line with what I've been looking for. In fact, yesterday I left it that we cannot put a high in here yet as the completion point for the minor wave 2, and that we needed to and expected additional upside, and boy did we get it today. So again, I find it very astounding that there are still a number of investors slash traders slash whomever that believe that this is the right thing to do, to put your money into a market, particularly when it appears to be reaching at least a near-term top. But again, when you're reading articles such as what I was reading today that came across on my Thinkorswim platform, and they basically were talking about that stocks were higher today because of the hawkish statements made by Powell. And I kind of stopped and I thought, it's like, well, that just tells you that they believe that interest rates have been baked into prices, as they say. And quite frankly, nothing seems to bother people. Even when we had, in fact, Governor Bullock, I believe it was, from Atlanta, came out yesterday and was talking about that we could expect 7 additional interest rate raising this year, and possibly 3 to 4 next year. And so I found it very astounding that that is being interpreted as bullish. And I have to attribute it to that we have a lot of people investing in the market that are in the markets that don't really have the back knowledge, I guess I'm going to say, on what it really does take to tackle inflation. And basically, it's been easy money for so many years. It's been easy money for 12 years. 2009 is when we started to get the stimulus and we started to push money into the system, and we started to pay corporations, and we started to really put interest rates almost down to 0 over a period of time. So if that's your experience, then a little bit higher interest rates shouldn't bother you. But the fact is that inflation is still a very concerning problem for our country and actually for the globe. And with things being disrupted in the Ukraine, et cetera, who knows what the supply chain, what's going to happen with our supply chain, what's going to happen really with the price of oil, what's going to happen with wheat deliveries, what's going to happen with other commodity deliveries. And so there's still a lot of unknown. And therefore, I still believe that we are in a minor wave 2. And I have readjusted the count here on the hourly chart. And again, here we have wave A of 2, wave B of 2, we're right there. And that we're in the C wave, and all C waves consist of 5 waves. Now, this is a minute C wave, so these are going to be sub-minute degree moves. And I changed the count up just a little bit because we were still blasting here, and I needed it to make sense to me. So I have 1, 2, 3, 4, and this is 5, and I actually can count complete at 14,690.75. I can count it complete there. The 1, 2, and the 1, 2, 3, 4, 5 of 3, 4, 5. Now, this little 5, and I know that's really small, and I'm sorry, I apologize. Let me see if I can bring that out a little bit more. This might be a little bit, but even when I pull this down, if I look at it, I'll tell you how I was looking at it before. I put it on the 5-minute chart, and then let's just take a look from there. You can see it's an ascending triangle. And so it kind of comes in right there. So I got 1, 2, 3, 4, 5. And so I feel that we do have chance that it's complete right here. And the initial drawdown off of that high at 90 brought us all the way back to just about 40. So it dropped 50 points real quick. Now, in 5 minutes, actually. So I still have to leave the upside together for right now. But I am feeling more strongly, or a little bit more confident, I should say, that we are getting very close to the end of this. The only other possible way to count this is 1, 2, and this is a third wave, and then we're going to do a 4 and a 5, and that just does not fit my larger count. So when I go back to the larger count, it just continues to show me, first of all, this could not be 2 because it took out the low of wave, what would be wave 1. So therefore, I have to stick with what I have, and it doesn't fit in anything. So I still believe that's the highs, 1, 2, 3, 4, 5, intermediate 1, intermediate 2, minor 1, beep, 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 minor 2. And really, as an entire move, it does fit, and it fits pretty cleanly. Characteristically, second waves can do exactly what this one is doing. That it came at a point where everyone believed that that was the low of the lows, and we're not going any further, and you just buy. And there were several statements made and a lot of things, but it just doesn't fit with what we're being told. Even if you're saying that, well, the stock market always is 6 months ahead. That is to me garbage, because it leaves no room for anything, actually. And that's just to say that, well, this is all going to take care of itself, and in 6 months we'll just be back to absolute beautiful rally, and everybody be making a ton of money. That's a hope, a woman, and a prayer. But in any case, technically trading, today, the morning was really good because we had that solid move. And we got up initially up to that 684.75, and then we started to pull back from. And so this was very solid and easy money. In fact, the first 5 minutes were fairly intense and really good trading in both directions. So that is my point that I want to make, that while we await the top, as long as the trading remains good, after this afternoon, this got pretty sloppy. And it was more difficult. Not impossible, but it was more difficult. So the money making was in the morning. They were strong, they were great bars, and everything kind of fit together. And so my point is that as long as we are going to continue to trade technically, then technically these were all buys and you needed to participate with. And as long as that remains the case, now this was more difficult. Sell, buy, sell, buy, sell. Well, so we're lacking follow through and not getting very far, which is why I feel it was that fifth wave. Now, going forward, we need to continue to allow for additional upside. Now, remember, I do have some resistance at 17,068, I believe. And then it really just kind of goes. So we're going to find some resistance, I believe we should, at 14,700, then 14,025, then 50 and 75, those larger round numbers. And so, and then again at 14,800, if we get that far. Now, we're not getting any signals. I do think that it's slowing in terms of the intensity. This morning was tight. This morning was like they just pushed. But then things kind of to taper off and slow down, but there still were pushes. So again, if I go in and take a look at our volumes, the volume in the NASDAQ mini contract was nothing to shake a stick at. I mean, it was 500,000. And normally on a day that really pushes, you see the market up 284, this should be 6, 7, almost a million. Now, the micro was just over a million. Even the S&P going up 50 plus points should, I believe, be doing it on 2 million. And it's not there. It's not bad volume, and there was certainly enough to trade, so don't get me wrong, but I'm saying that it's tapering. So I don't think that we're getting that same inflow. And in fact, as you can see, money flow on a day that we were up 285 points, money flow was going out. Okay, so initially in, then it just reached it and they just took the money back. They took the money out. So we need to kind of see that continue if this inflow is going to continue to propel the market higher. For tomorrow, I am going to be trading technically, as I have been doing during this whole period, regardless of what I may say and what the potential is. I'm giving both sides. Upside, we have potential. It still is out there. We have 14,700, 14,750, I'm going to call it, 14,068. There was price resistance there. And then 14,800 and then 14,845. Those are the resistance zones that I believe will contain tomorrow. Now, a break above there, get out of the way. But even if we're breaking 14,700, these are tradable moves, provided that we've got that volume and they're going to continue to push. Now, downside, if indeed this is it, and we reach that high, and we're going to be able to tuck it away in terms of minor wave 2, then again, same story. I'll be looking for minor wave 3 to begin. And what I will be looking for on this hourly chart is 5 waves down that I can see on the hourly chart and label as such. That would seal the deal for me in putting the high wherever it comes in as the completion point for minor wave 2. Also, it's got to start breaking the 8, the 20, the 50, and then get itself down and break that 200. Now, I believe we're at a level that the turn should be sudden, nasty, mean, get out of the way, just take no prisoners, selling. That suggests crash-like conditions. That's kind of what I would be looking for, to be honest with you. I think we've gone up on such hope, and the wall of worry was pretty evident today, but still, we have a lot to confront as markets. We're getting ready to drop into earnings season. Adobe came out today and actually reported earnings and talked about that they expected $4.2 or $4.3 billion year for total 2022. They didn't like it. In fact, let's just take a peek where Adobe was. Adobe closed at 466, and they got it all the way back to 463. Good for them. It was down to like 42 right at the close. So they brought it all back. So this is what it's going to take to keep this market up. They're going to have to swallow negative and just keep on pushing. Now, when a company tells you this is all we expect to make, and maybe the market was expecting more, and you come in and buy it anyway, well, you get what you pay for. Now, so I do think that we still have that nasty gorilla in the room, and that is inflation. We still have interest rate hikes coming. We still have an indecisive problem going on in the Ukraine. And we've now getting pieces of news that are talking about that Russia and Putin might be ready to use chemical warfare in Ukraine. And then even the ex-premier, and now I guess head of the security forces, Medvedev, is talking about giving stern warnings to Poland for backing the Ukraine. So this is a setup. So what does Putin do? Will he go further? So here we have the unknowns. I wouldn't be buying up the market on this kind of unknown, but yet that's exactly what is happening. So I'm just laying it all out. Back to the technical view. We have both sides. If it's going to go up, here's where I've already said where the resistance would be. If it's going to drop, it needs to drop fast. It needs to be like someone has just put the right hook to the jaw of the markets and knock them down to the canvas. That's what I'm talking about. And that's what I think will happen when the market decides to begin the next segment down. Now, trade smart, trade technically. Trade with the market, try not to trade against the market. It can be very costly. And our next update will be on Wednesday, the 23rd of March.